So here we are together because there are amendments in capital gain. I have taken the whole capital gain classes in depth with the notes in the Telegram and WhatsApp group. This is the sixth class today. Yes, right, for the capital gain. And now we are discussing the core amendments. Everywhere earlier also we have taken the amendments. And some of you are asking for salary and other amendments. Surely, tax amendment, all the videos will come on this channel. So like, share, subscribe. And it's not going to be recording and amending and uploading. It's going to be live always. So right now also I'm teaching directly in YouTube. So what we are doing in today's classes, those who have done and watched all other 5 classes are also there in the YouTube. If you feel capital gain, you want to score 7 or 8 marks question, very easy, and 2 MCQs or case scenario, then watch all the lectures, take down the booster notes. There I've already given the amendment for buyback of shares. And there are amendments in the age of the capital asset and the tax rate. So with the amendments, age of the capital asset and tax rate, which I am teaching you now, we will also work out the question in a comparative way, that what is going to be the tax payable by different SSEs, right? So write down what I'm making you write, even if the notes PDF is there with all of you. Okay, right. So here I'm sharing the screen and you already have this material. Yes, sure. One concept is there, dear students, that's called as deemed dividend and income from other sources. But related to that, liquidation, section 46 is also there. Last, I'll take that. Those who wish, they can continue watching. Those who just want the amendments, stay connected till the amendments and then you can leave your wish. No problem. Okay, right. So here we are seeing that what is a capital asset, movable or anything, when it is transferred, you have to pay the capital gain, right? Now, in the capital gain, we have to decide whether it is long term or short term. So that will depend on the age of the capital asset. How much time you are holding the capital asset will decide whether this capital gain is long term or short term. Okay. So there's an amendment in that table. This is also a very nice table related to tax prepared. I'll discuss this also थोड़ा little later. पहले हम बाकी पूरा कर लेते हैं. Okay. Yeah, here we are. Okay. This time we all know that the budget came in between on July. So from 23rd July 2024, there are some changes in the capital gain. I'll teach you and we will also solve the question related to that. So now, as I told you, whether it is short term or long term, we will decide according to age of the capital asset. Age of the capital asset, like my age, your age. मेरी age पूछना नहीं, but my age, your age. Like that, how much time you have holded the capital asset. Say, for example, listed shares. If you hold for less than 12 months, within 12 months only you buy and sell. It's a short-term capital asset. Then capital gain will also be short-term capital gain. If you hold these listed shares for more than 12 months and then sell it, it's a long-term capital asset. So profit or loss will be long-term capital gain. Is this clear to all of you, right? So now, listed securities, units of UTI, mutual fund and all, equity oriented, zero coupon bonds, where you don't get anything on maturity, you get the full value, ULIP, right? All this excluding market linked debentures, because there's some change for that. So, isko chhod do. Just simple logic is listed shares, units, and zero coupon bonds. If they are held for less than 12 months, within 12 months they are held and sold and all, then short term. Above 12 months, then long term. Unlisted shares, land and building, up to 24 months, that's 2 years. If you're holding the land and building for 2 years, within 2 years you're selling, then it's short term. More than 2 years, if you hold land and building and then sell, then it's long term. Now, debt oriented fund, unlisted securities other than shares, unlisted shares to yahi aa gaye. And all the other capital asset, jewelry, virtual digital asset, open plot, all. Less than 36 months, short term. More than 36 months, long term. This is only before 23rd July. Less than 36 months before 23rd July, then it's short term. After that, 24 months. More than 36 months before 23rd July to long term. After that. In short, the gist is I want all of you, you have the material, right? Put this in bracket. After नहीं from आएगा, not after. From 23rd July 24 onwards, 36 months is scrapped. Any asset other than listed shares and securities, that is 12 months. But other than that, in this period, any asset, if you hold it for less than 2 years, short term. More than 2 years, long term. Is this clear to all of you? Right? In short term, there is no indexation. In long term, some cases we are doing indexation. Most of the cases there also it's not there. Okay? फिर से एक बार, age of the capital asset will decide whether it is short term and long term, and short term and long term will decide the tax rate. Tax rates are different for short term, different for long term. So now let us see. Listed shares, units of UTI less than 12 months, short term. More than 12 months, long term. Done. Unlisted shares, land and building and all, less than 24 months, short term. More than 24 months, long term. All other assets, less than 36 months, short term, and 36 months wala condition is there only if the asset is acquired before 23rd of July 24. Right? If you have transferred the asset after 23rd July, then holding period में 36 months you don't have to check. Only after 23rd July, what is the situation? Only two slabs are there. Less than or more than 12 months for the listed shares, UTI and zero coupon bonds, and more than 24 months for all the other assets. Unlisted shares, land, building, other capital asset, jewelry, virtual digital asset, and all. Is this clear to all of you? Now, one more change is in case of debentures, we all know indexation is not there, right? So, capital gain arising from transfer of market linked debentures. Market linked debentures are there. Now, what are market linked debentures? This definition I've just given for you to read, not much necessary. So, market linked debentures, wherein their returns will depend according to the market rate, and specified mutual funds. Okay. And unlisted bonds and debentures redeemed after 23rd July always would be short term capital gain and taxable at slab rate irrespective of the holding period. After 23rd of July, the debentures which are listed or unlisted, okay, listed to pehle hi aa gaye the, or unlisted, if they are redeemed after, see, in respect of debentures transferred or redeemed before 23rd July, the capital gain will be short term or long term. That will depend on the holding period of the debentures. Okay, right. But now, after, if the unlisted debentures or bonds are redeemed after 23rd July, the resulting capital gain will always be short-term capital gain. Index benefit in any case not available in case of bonds and debentures if they are transferred after 23rd July. I want to repeat, if bonds and debentures are transferred after 23rd July, no indexation. First thing. Second thing is it will be treated as short-term capital gain. Before that, it can be short term or long term depending on the holding period. Here, unlisted securities and all. But after that, and same for market linked debentures and mutual funds, forget it whenever you have acquired, it's always going to be short term capital gain. Clear? Short term capital gain. So I know thoda sa you give yourself time to repeat this, and as a teacher, I'm teaching you now capital gain amendments with the question answers, and I'll surely take up all the amendments. Tab again I will take up this also. Yes. Now, Tax rates mein I have divided into two parts, April 24 to 22nd July if you transfer. And if you transfer from 23rd July onwards, then what will you do? Okay, right. Long-term capital gain on shares until now, till 22nd July is 20% with indexation. Now indexation is not applicable in long-term capital gain. So it's 12.5% without indexation. Clear? If you have transferred the asset before 23rd of July, then capital gain, say jewelry or anything. One second. Huh? Say you are transferring any asset, say jewelry you are transferring, and there is long-term capital gain. So if you are transferring before 23rd of July, then you can take 20% with indexation. After that, 12%. Clear? Only in case of land and building, this you have to learn, you have to write, you have to chew, you have to digest, you have to eat up. In case of individual and HUF, resident, individual and HUF, if they have transferred land and building before 23rd July, okay, then it is 20%. After 23rd July, lower of, ये before के यहाँ जरूरत ही नहीं है लिखने की, because before 23rd July तो it's 20% with indexation, land and building. After 23rd July, from 23rd July onwards, if land and building is transferred by resident, individual and HUF, they have a choice. They have acquired before this date, but they are transferring after. They have a choice. They can take 20% with indexation or 12.5% without indexation. Their choice, obviously, whichever is lower. Right? Now, long-term capital gain on listed shares. Okay. Whenever you calculate long-term capital gain on listed shares on which security transaction tax is paid, we all know that security transaction tax is not allowed to be deducted as expense in capital gain. Security transaction tax, or STT I call it, is allowed to be deducted under section 36 when you treat share trading as your stock in trade, buying of shares, selling of shares and all. Now come back to this. Long-term capital gain on equity shares, first of all, it is exempt up to 1,25,000. Till last year, this limit was 1 lakh. From 1st April onwards, ma'am, 22nd July tak, nahi. For this 125 for the whole year, long-term capital gain on listed shares on which STT is paid is exempt up to 1,25,000. Okay. Now this 1,25,000 tak it is exempt. Agreed. Right? This is over and above the basic exemption. I want all of you to write. Over and above basic exemption. Say I am an individual less than 60 years. What's my basic exemption if I pay tax out of default tax regime? 2,50,000. Additional 125, capital gain is exempt. Beyond 125, earlier till 22nd July, it's taxable at 10%. Above 1,25,000. Now it's 12% above 125. Clear? Long-term capital gain सबके लिए. See, here it was 10%, here it is now. They have made uniform. Don't take indexation, and for every long-term capital gain charge 12.5%. Except for this bridge which they have made for this year. Okay, you've sold land and building. You're getting huge tax. Don't worry. You stretch the original cost till today and take index cost and pay 20%, or without indexation 12.5%. ठीक है? Long-term capital gain from transfer of unlisted securities or shares of closely held companies. Company in which public is not interested, private company, or by non-residents. These are unlisted shares. Then earlier they were having an option. 10% without indexation, or 20% with indexation. Now for them also 12.5%. So if you check everywhere, long term is 12.5%, 12.5%, 12.5%, 12.5% without indexation. Only if you sell land and building, you have a choice. You can take 20% tax with indexation or 12.5% without indexation. And second is 12.5% above 1 lakh, 25,000 instead of 1 lakh. But 1 lakh is not there up to this and then no. From starting of the year. How this 125 works, I'll give you one example for that. Okay. Right. Now coming to short-term capital gain on shares on which STT is charged under section 111A. If you can preferably learn this, long-term capital gain on shares 112A, short-term capital gain on shares 111A. Earlier it was 15%, now they have made 20%. Long-term tax they have reduced, short-term tax they have increased. And short-term capital gain other than shares, short-term capital gain other than shares, take it at tax rates. Followed all of you? So if I've purchased a house and within 3 months I sold the house, it's short-term capital gain, routine slab rates. Whether you are in old regime or you are in normal new regime or in default regime, jo bhi hai, slab rates. Is it clear to all of you? I think better shall we write it so that we learn it. Or this table is clear. Comment no? Yeah, for long-term capital gain, I'll give you some example. An unutilized basic exemption concept also I'll explain. Go to your notebook, please. Tax rates. We'll write in a different way so that we learn. Tax rates. Before 23rd July 24. I know never it happens, but for this year the budget came in between. Otherwise, always the changes are from financial year. So before 5 years government, 19 to 24, I hope all that you know. And from 23rd July 24, what's the situation? Now let us take up short-term capital gain. Other than shares. It's not shares, it's other than shares. Then it is slab rates. Here also it is slab rates. Understand and write. Short-term capital gain on listed shares. Listed shares on which STT you are paying, and section is 111A. Till 23rd July it is 15%. Now it is 20%. Now comes section 112A, long-term capital gain on listed shares. STT is charged. Long-term capital gain on listed shares. STT is charged. Okay, right. So, first of all, up to 1,25,000 exempt, over and above. Arey, I am making you write because I have printed and given you, but this very important pen flow nahi hoga. To likho na beta. Over and above basic exemption. For this, I'll give you one example. Long-term capital gain. Listed shares. Earlier, it was 10%. Over and above 125. Now it is 12.5%. 12.5%. And listed shares, anyhow, indexation is not there. Now, long-term capital gain on land and building sold by. Just a minute, huh? Not a break, but just a minute. Sorry. Thank you for waiting. Bolo. So, once again, short-term capital gain other than shares is slab rates. Short-term capital gain on listed shares, it was 15%, now it's 20%. Long-term capital gain on listed shares, it was 10%, now 12.5%, but above 1,25,000. Now, long-term capital gain on land and building sold by resident, individual, or HUF. Okay. And it's a long-term capital gain. So earlier it was 20% with indexation. Now you have a choice. 20% with indexation or 12.5% without indexation. You have a choice now. 20% with indexation or 12.5% without indexation. Is this clear to all of you? Only for the asset which is transferred. If you want, you can write here transfer before 23rd July 24. Acquired to pehle, but transferred after 23rd July 24. Ma'am, it's written already above, still before and after. Land and building which is sold by resident, individual and HUF, they have got a choice. Here though it's 20% with indexation. We have done so many problems for exemption also. Here it is 20% with indexation or 12.5% without indexation. Okay, right. Yes, I know it's a challenge for you and me both to do this part of amendment. It's not difficult, but it's new. No, we were used to until now. Okay, I want to give it a numbering. This was A, this was B, this was C, and this is D. Okay. So long-term capital gain on listed shares have finished. Long-term capital gain on land and building is over. And now, long-term capital gain. Other assets. Other assets. It was to close it because it's the screen sharing and the lower part of my laptop has got stuck. I have tried formatting also, it's not happening. Only way out is I have to close and restart. So sorry. So there will be a break of 2 minutes and again I'll start. Okay, some trouble was there yesterday. Now this part I'm recording now, to be honest. Otherwise all the other lectures were live. Okay? But we will continue from where we stopped. So I'm doing the screen sharing for all of you. We were checking the changes in the tax rates, right? Okay. On short-term capital gain on listed shares on which STT is charged, it was 15% before 23rd of July 24. Now it is 20%. Long-term capital gain on shares is exempt up to 1,25,000. This 1,25,000 is over and above the basic exemption, right? So that is exempt up to 10% and now it is 12.5%. Long-term capital gain on land and building, which is sold by resident, individual and HUF. This one is very important. Always on long-term capital gain on land, building and all by resident, individual and HUF, it's 20% with indexation. Now, from 23rd July onwards, you can take it as 20% with indexation or 12.5% without indexation, whichever is beneficial, right? Okay. Whichever is beneficial, so obviously whichever is lower you will take. Long-term capital gain on all the other assets is 20% with indexation. And now it is 12.5%. In short, indexation is done away with. And on long-term capital gain, the tax rate has gone from 20% to 12.5%. Only on land and building, which is acquired by resident individual and HUF before that date and now sold, you have a choice to take it 20% with indexation or 12.5% without indexation. Next one we are writing is unlisted shares. Yes, we will surely do the question related to this tax part. Unlisted shares or shares of closely held companies or the shares which are with non-resident. Earlier also they had two options. This one is rarely asked, but then it's a part of the syllabus. So surely we'll take it. 10% without indexation or 20% with indexation. 10% without indexation or 20% with indexation, right? That's what's there for unlisted shares earlier. Now what it is saying, 12.5% on the long-term capital gains without indexation. Clear to all of you? So this is how you do it. Yes, yes. I did say I'll teach you what is 1,25,000 basic exemption and we'll take it as 10%. Suppose example is you just have long-term capital gain of 8 lakhs and you're filing the return out of default tax regime. Okay. So no age, nothing is given. So what is the basic exemption out of long-term capital gain? 2.5 lakhs, right? 2.5 lakhs. So 5.5 lakh is the balance. Now for long-term capital gain on listed shares, you get additional basic exemption 1.25. 1,25,000 is exempt. Okay. Additional basic exemption. Now what is the balance tax? If this is before 23rd of July 2024 on the balance, you got it? Basic exemption, unexhausted basic exemption सब मिलता है from long term capital gain on shares ले लो on shares 112A section and on balance earlier it was 10%. This one I am showing you, this one. And now, if you take now, then 4,25,000 ka 12.5% of 4,25,000. ठीक है? So this is how you will get additional basic exemption of 1,25,000 over and above that 2,50,000. And that will come only in case of shares which are listed in the stock exchange. Yes, basic exemption benefit you always get in the tax rate. We are doing the questions and solving sharing the material also. Here we go. This is all I made you write again so that you learn. One more table I have prepared. Short-term capital gain on shares. Section 111A. Deductions are not allowed. Chapter 6A deduction, basic exemption, yes, rebate. 87A का rebate बिल्कुल मिलेगा. And for this highest surcharge rate is 15%, 25% and 37% is not applicable. Yes, are you all with me? Give yourself time to learn the tax rates and apply it. So if you check like this, short-term capital gain on shares, long-term capital gain on shares, other short-term, other long-term. Deductions are not allowed anywhere except short-term capital gain on shares, because there what you do, it is taxable at tax rates, slab rates, तो वहां मिलेगा. Basic exemption everywhere. Rebate except long term capital gain. Long term capital gain में से you don't give a rebate. Long term capital gain on shares. And additional surcharge rates is not applicable anywhere except short term capital gain, other short term capital. I know it will take time to learn, but it's easy. Short term capital gain on shares, long term capital gain on shares, and other long term capital gain, ये तीनों में additional surcharge rates doesn't come. That's 25% and 37%. Even if your income is 8 crores, it will be highest 15%. Okay. This all we have done. Please watch the lectures. I have done lot of partition, that this will be for slum sale. This is for advance money forfeited. One whole lecture we have done practice of the stamp duty value. Now let us quickly come at the end. We have completed the exemptions also, related questions also, just with the different tax rates. And because this one is very important, they can ask you this question, the one which I am taking. Bonus shares and वो सब पता है सबको. Right shares, whatever you renounce, it will directly be treated as capital gain. Stamp duty value you have to take if it is higher. All these questions we have done in class only, right? Advance money forfeited before 14, deduct from cost. After 14, take it directly. Exemptions we have done all. From the capital gain, you give the exemptions. All these questions we have done. Yes. Of course we are doing now. ये भी किया था. In one you will get the exemption. Yeah. This one is rarely asked, but just once check it, that Smiley Limited has 1,000 shares. STT is not charged. Unlisted, they might be. And they are transferred privately. So during the year, they have paid PPF and Mediclaim, for which they can claim a deduction and all. Assuming that she does not have any other income, the total income and tax payable you have to calculate as if they have opted out. Capital gain will not be allowed to be deducted, but because these are like unlisted shares, you have an option of paying tax at the rate of 20% with indexation or 10% without indexation before July. After July, it's same, 12.5%. Yes? So they might ask you a case like this. Sale consideration, less capital gain. Basic exemption you will give. Here you have taken indexation, here you have taken direct cost. With indexation 20%, without indexation 10%. And rebate milega. And they have opted out of default tax regime, so there will be a rebate of up to 12,500. Right. Chalo, I want to take up this question which is there in study material. Mark it important and share this part of the video. If you're watching as recording and solving the question, please pin in the comment the timer when I'm taking up this problem, because this is latest with what changes I told you. Land and building, if resident individual and HF are transferring after 23rd July, they have an option. They can take at say with indexation 20% or without indexation 12.5%. Okay, right? So Shiva, and when I am getting the property as gift, I have to take the cost of the previous owner. Okay, so Shiva purchased a house on 15/2/79 for 324. In addition, he has also paid stamp duty value. Okay, 350. So he purchased the house. 324. In addition, he also paid the stamp duty value. On the purchase of the house, he has paid the stamp duty value. Purchase भी also कब है? और तब का stamp duty value तो irrelevant है. It's 1979. On April 2008, Shiva entered into an agreement with Mohan and received advance. However, sale did not materialize and Shiva forfeited the amount. Whenever advance money is forfeited before 1st April 14, then 1st April 14, right? Then you have to reduce the advance money forfeited from the cost. In May 2015, he again entered into agreement for sale of the house and received advance. However, Deepshika did not pay the balance and Shiva forfeited the advance. Okay. So, first advance money was forfeited before 2014. So, minus from the cost. The second advance money forfeited is now. So, straight after 1st April 14, if you forfeit advance money, it will be taxable under income from other sources, right? Now, in August 15, Shiva constructed first floor and incurred a cost of 390. Okay, so 3,90,000 is the cost of improvement. On 15/11/24, Shiva entered agreement for sale and received the amount 150 as advance to an account pay check. Mr. Manish paid the balance entire sum and Shiva transferred the house. Okay. I know some of you are feeling study material. Last question this is. See now here 2-3 stamp duty. He has transferred the house and on that house that day advance money is received by account pay check. If token money is received by account pay check, then you have to take the stamp duty value on the date of the agreement. If account पे check नहीं cash में आता या token money आता ही नहीं or it is not received, then you have to take the advance money, then you have to take the stamp duty on the date of registration. Yes, Manish paid balance amount and Shiva transferred the house. Shiva has also paid brokerage. Fair market value on 2001 is important because they have acquired the house in 1979. हाँ, so fair market value of the house. क्या क्या adjustment नहीं है in this problem है. For every adjustment I'll make you write note. थोड़ा सा पढ़ के करेंगे. It's a very nice question. 11,85,000 is the fair market value. On 2001 you have to take instead of the cost. That is 3,24,000. Right? On the same day stamp duty value is given. So we know that you have to take cost or original cost of 1979 or fair market value of 2001, whichever is higher. But this cannot exceed the stamp duty value. So we will take the cost as 10,70,000. Further, stamp duty value on 15/11/24. It's 15/11/24 was 39 lakhs and on 22 is 41 lakhs. See, 15/11 was the stamp duty value on the date of agreement when you receive the token amount. So we will take this. If no token amount was received by account pay check and all, then we would have taken 41 lakhs. Compute the capital gain. Problem number 29. Nice question, no? Okay. 2-3 concepts which are very important in this I'll revise. One, advance money is forfeited before 1st April 2014. So reduce it from the cost and then do indexation. One is forfeited after 14. Straight tax it in income from other sources. Second is stamp duty value on the date of agreement is given. Because the amount is received in account by check, that only you will take. If not, then stamp duty value on the date of registration you have to take. है ना? नहीं तो फिर registration वाला लेंगे. But here you will not take the registration one because on the date of agreement only, when you receive the part of the stamp duty you have received by account payee check. Okay. And now asset was original acquired हमारे जमाने में 1979. But then it is transferred later and indexation also starts in 2001. So they have given the fair market value of the 2001 that we will take. So we will just calculate the capital gain. Reading the problem, I hope, is clear to all of you. When did they transfer the house? That is also important. $25. If you transfer after, I want to write all the fundas we are using in this. Chalo, let us write. Shall we write the concepts? जहां भी important है हम लिख लेंगे concepts. Computation of income of Shiva. Start with the sale consideration. Excuse me. Little cold I am having today, but I wanted to complete it in sequence. Yes, it's a very nice problem. Sale consideration. (15) 2024. Actual sale consideration is 30,50,000. Stamp duty value on agreement. How much is the stamp duty value? $30,50,000. On 15th November. 15th of November 2024. The stamp duty value is 39 lakhs. Or stamp duty value on registration. वो भी दिया है आपको. Registration के दिन कितना था? 41 lakhs. Are you getting? Actual sale consideration is 13,50,000. But you have stamp duty value on the date of agreement on registration. And on agreement, now I'm writing here, stamp duty value on agreement will be taken as token money. as token money is received by account pay check. Kitna? 39 lakhs. Actual sale consideration is 30 lakh 50,000. Stamp duty value on the date of agreement is 39. Stamp duty value on the date of registration is 41. But on date on agreement, if they give account pay check or NIFT or RTGS some token amount, then you have to take that, and that is 39 lakhs. Less expenses they have given. Brokerage. %1 of the sales. Yes, 39 lakhs minus 30,500. 38,69,500. That's the net sale consideration. Now it's time to take index cost of acquisition. We are doing with the first option. Oh, sorry, I missed writing here. Option 1. Tax at the rate 20% with indexation. So now index cost of acquisition to 1979 mein hai. But can we take the fair market value? It's given in the second or third line. In 2001 and 2, what is the fair market value of the property? 11,85,000. And stamp duty value 10,70,000. Stamp duty value, say the fair value cannot exceed. So we will take it as 10,50,000. $10,70,000 is the stamp duty value. Cost in 2001 and 2. Yeah. In 2001 and 2, why we are big? Because asset is purchased in 1979. तो तब से अब तो नहीं लेंगे ना. So indexation starts in 2001 when fair market value is 1185, but it cannot exceed the stamp duty value. All the concepts are revised in this. So obviously we'll take 10,70,000. From this we will reduce advance money forfeited before 23rd July 1st April, sorry, 1st April 14. 1st April 14 के पहले if the advance money is forfeited, then reduce that from the cost. He sold the property to Mohan and received the token amount in April 2008, 1,11,000. Will we reduce or not? 1,11,000 from 10,70,000. Very nice adjustment as advance money is forfeited before 2014, reduced from the cost, and only net cost you should do the indexation. 100 has become 363. 100 has become 363. 959 kitna? 9,59,000 into 363 divided by 100. 34, 81, 170. 34, 81, 170. Okay. Cost is 1979, so you have to take cost or fair market value, whichever is higher. But fair market value cannot exceed stamp duty, so we took stamp duty. From that, we reduced the index cost because, forfeited amount, because forfeited amount was forfeited before 1st April 2014. Yes, I am coming to that. There is one more amount forfeited, but that will be taxable under income from other sources. And that is in May 15. So we can just write a note for that. In May 15 only. That will be taxable in income from other sources. ये तो हो गया index cost of acquisition. Now there is index cost of improvement also. After buying the house, in August 15, he constructed one more floor. So 3,90,000 is the cost of improvement. Okay. And when did he do that? 2015 and 16. And now it is 24 and 25. 15 and 16 is 254, has become, what was available in 254 has become 363. So 390 kitna? 390 into 363 divide by 254. 55, 5 lakh, 57,363. Today the pen is giving trouble. 557, 363. So reduce the cost of acquisition and the index cost and you will get long-term capital gain. This is one option. You can take long-term capital gain at the rate of 20% with indexation. I think I wrote it in the top. Option 1, 20% with indexation we are doing. So now calculate. 38,69, 500 is the net sale consideration after brokerage, minus 34,81, 170, minus 557, 360. So there's a loss. Loss is coming. 169,033. It's a loss. Long-term capital loss cannot be carried forward. Ma'am, why? I taught you carry forward and set off of losses, but now I am only saying this cannot be carried forward. The reason is, in this financial year, you have option. Either pay the tax at the rate of 20% with indexation. If there is a loss, it will not be allowed to be carried forward. Or go for option 2. That is long-term capital gain pay the tax at the rate of 12.5% without indexation. Without indexation. Okay? With indexation and without indexation. Again, can we start with straight net sale consideration after that brokerage and all? 38,69,500. ना? This is the net sale consideration. Now don't do indexation. Directly take the cost 9,59,000. Why 959? Because from cost you will reduce the amount forfeited, but don't do indexation. And again 3,90,000. Cost of acquisition, cost of improvement. 38,69,500 minus 959 minus 390. 25,500. That's the long-term capital gain. 25,500. Now let us calculate tax at the rate of 12.5%. If it is without indexation, it's 12.5%. 3,15,000. Very nice question. 063 into 4% health and education cess. 12,603. 315,063. Did you get it? You can pay the capital gain for individuals and HFs who are resident with indexation or without indexation. With indexation, it's 20%, but I didn't calculate 20% as it was a loss. And without indexation, it's 12.5%. This is there in the study material, and what best you are learning here is stamp duty value or sale consideration, whichever is higher. But two stamp duty value are there. I'm doing so much of repetition for all of you. You can get this not only as question answer, but also as MCQ. Stamp duty value on the date of agreement or registration. So we'll take the stamp duty value on agreement because that day token amount was received by account payee check. If no amount is received on date of agreement, or if amount is received but it is in cash, then you will not take. So 39 lakhs, then brokerage, net sale consideration, and then from the cost you deduct the amount forfeited. Acha, second amount forfeited is in May 15. So in May 15 and 16 only it will be taxable in income from other sources. You have to write a note. And cost of improvement. And in case you don't want to pay 20% tax with indexation, so do it 12.5% without indexation. Okay? Right. So that's a very nice question. We have solved. One more question is there. We'll definitely take it. अच्छे से करते हैं उसको भी. अच्छा question है. Very nice. Just above this. After this is the slum sale and slum sale and that reverse mortgage we have already done. This one is a very nice question. Calculate the income tax liability for 24-25 for 4 different kind of the SSEs. I'm discussing it and you do it as homework. He's a resident and he has got total income other than long-term capital gain 2,40,000 and long-term capital gain from sale of vacant site 85,000. So other income is 240. Now we have a concept called as unutilized basic exemption. What is basic exemption for Ajay as he's opting out of default tax regime? So what's normal tax for Ajay? 2,50,000. 240 is other income, no tax. 10,000 is unutilized basic exemption because basic exemption is 250. You utilize 240 here and your tax will become nil. 10,000, what is extra? That can you set off from the long-term capital gain? Yes. That's why long-term capital gain 85 after adjusting the unutilized basic exemption will become 75,000 at the rate of 20%. And rebate, because the total income is less than 5 lakh, you will get a rebate up to 12,500, and on remaining you have to pay the tax. Is this clear to all of you orally? Next, Vijay, he's a non-resident. Huh? Non-residents don't get additional basic exemption, but 250 to milega. He sold listed equity shares. Long-term capital gain. कितना है long-term capital gain? 10,000. So 1 lakh tak exempt hai. And other income in the question is 310. Long-term capital gain on shares is exempt till 1 lakh 25,000. ये 1 lakh last year का limit था, it has become 1,25,000. Huh? But other income is 310. So he will get a basic exemption of 250. Ma'am, he's 60 years and above. Basic exemption should be 3 lakh. Nahi milta. Additional basic exemption is not allowed for non-resident. 3 lakh for 60 years, for 80 years above 5 lakh not allowed. Yeah? Right. So here it will be, his income is 310, 250 is exempt, remaining 60,000 5%, and then tax. And anyhow, the total income is less than 5 lakh. So the tax will be 3,000. Rebate also you will not give. Non-residents don't get rebate. Okay, your income is up to 5 lakh. Under 87A, you take 12,500 as rebate. That's only for seniors, resident citizen. So non-resident, he will not get additional basic exemption. 3 lakh, सिर्फ 250 exempt होगा out of 310, and remaining 60,000 पे tax लगेगा. Routine. He'll not get rebate also. Now resident SSC Sanjay, 81 years. When it is resident, it is 5,90,000. And if it is resident up to 5 lakh, income is exempt. Second is 60,000 from agricultural rural land. Okay, chhod do, chalo. Next is 5 lakh. I hope you are getting. 60,000 is to exempt. Rural agricultural land. Out of 590, 5 lakh is exempt. Remaining 90,000, 20%. 590 है ना, तो 250 की जगह up to 5 lakh exempt. 5 lakh and beyond, it's 20%. 18,000, add cess and do it. I'm not doing it in writing. Of course, when we do default tax regime, we can solve with both the options. But abhi to come out of default tax regime, unutilized basic exemption benefit and additional basic exemption you don't give to non-residents. See, non-residents. 480 is the income. What will be basic exemption? 250. Remaining 230, 5% tax. No rebate. Non-residents don't get rebate. So this is their tax claim. Check it. If you have any doubt, ask me. Pucho. Two things you remember: non-residents don't get rebate, and for non-residents, additional basic exemption is also not allowed. So that's all for the 6th class of the capital gain. I have discussed all the tax rate. Read it, like, share and subscribe the channel, because again you will be getting tax amendments of all the other chapters also here. Okay. Right. We have come to end of the chapter, but there's a concept called as deemed dividend, which is there in income from other sources. And with deemed dividend, one concept is there that if the company goes into liquidation, section 46. So these two combine, I'm teaching now. It will take around 30 minutes. Those who are just looking for tax amendment, so it's done with. Tax rates, I have told you amendment. And age of the capital asset, 36 months is not there. After 23rd July, buyback I've already covered in the third lecture. Please check it. Okay. And of course, tax amendments also separately. I'll give the PDF with the best way I want to help you all. And let us complete this part. I didn't teach in other source. It's a concept of deemed dividend, which is taxable in other source because it has got a link in capital gain. So open the topic and same in the linked way only we are doing right. Either you can do that in income from other sources or in capital. Come to income from other sources. There I have added this, the concept of deemed dividend. Okay. So we all know that dividend is taxable in income from other sources, whether it is interim dividend or final dividend. Now there's a concept of deemed dividend out of accumulated profits. So very interesting. This is, just check with me. I know a little bit of accounts I'll have to teach, but that's good. Suppose this is the share capital of a company and it is 100. And whatever they earn profits, a part of it they distribute to shareholders, the profit in the form of dividend. Remaining they will accumulate. And these accumulated profits are called as reserves, say 300. And they also have current liabilities, say 100. So ye mila ke ho gaya 500. This side they have fixed assets 400 and current assets 100, and this is their balance sheet. Now suppose company decides to go for liquidation, section 46 of capital gain, and deemed dividend का section है under section 2 clause 22 clause A to E, सब आएगा 222A. So what is this? When the company goes into liquidation, shareholders are the owners of the company. After paying everyone, so when you try to repay the share capital, okay, you have to also pay the accumulated profit, right? So we tell to shareholders that, okay, you are owners of the company. After we have paid the government, the outsiders, the preference shareholders, you take 400 rupees home, share capital and accumulated profit. Now, part of accumulated profits or earned profit distributed is clear cut dividend, interim dividend, final dividend, which is taxable for shareholder in income from other sources. Now, this profit, whenever it goes to shareholders, directly or indirectly, it is assumed or deemed dividend. Did you all understand the concept? See, the profit earned by company, say it was 350. 50 rupees they directly gave dividend to shareholders after the AGM, routine dividend, interim dividend, final dividend, year-end dividend, whatever you call it. Remaining they accumulated, but it's the profit which is earned by shareholders. So whenever they give to shareholders, it will be deemed dividend. Is this clear to all of you? Right? Okay. So now there are 5 ways in which the company is going to give accumulated profit to shareholders in whatever form. It will be treated as deemed dividend. Those 5 cases are given. I'm trying my best to explain you. Take a pause. Trust me. Don't take it कि मैम कुछ तो लॉ के जैसा पढ़ा रहे हैं, don't know कब आता है. When I immediately solve the question which has come for 3 marks, it is so easy. There are 4 bits. Ye last bits I have added on my own. So just understand the concept. Any amount given by company to shareholders to the extent of accumulated profits, whether realized or not, resulting in release of all or any part of the assets. So out of accumulated profits, when the shareholders are getting money, like I told you, share capital is 100, reserves are 300. So this 300 is given to shareholders in cash or in form of asset. Say there's an asset and 160, you are the shareholder. Out of 600 shares, 100 you are holding. No, you take this from the reserves. If money is given, it will be treated as deemed dividend 222A. Now, any distribution to shareholders by a company of debentures, debenture stock, or deposit certificate, distribution of bonus shares to preference shareholders by the company to the extent of accumulated profit, whether capitalized or not. Okay, right. So you are giving to shareholders by company any distribution by to shareholders by a company of debentures. You know, you are giving debentures or debenture stock or bonus share to preference shareholders out of accumulated profits. So you are giving accumulated profits not in cash or kind, you are giving in converting in debentures and giving. Kaise bhi de do. The accumulated profit deemed dividend. Third, very popular. Any distribution made by shareholders on its liquidation to the extent to which distribution is attributable to accumulated profit. Any distribution by shareholders on liquidation. Yeah. To the extent to which it is attributable to the accumulated profits of the company. So company is going into liquidation. Shareholders, take your capital 100, take your reserves in any form out of accumulated profit, deemed dividend. Any distribution by company to shareholders on account of reduction of share capital. You know, internal reconstruction we do and we reduce the share capital to the extent accumulated profit. Fir wohi baat. To the extent of accumulated profit, when you give this, it's your deemed dividend. Any payment to the extent of accumulated profits by a private company in which public is not interested. Private company giving their accumulated profits to shareholders in the form of loan and advance. See, they are not distributing. Private company giving loan and advance to the shareholders who is having not less than 10% voting right. Okay. Or loan and advance is given to a third party, HUF firm, where the beneficiary is the member of the private company. Yeah. Then any payment on behalf of individual of any shareholder made to any person, even if the shareholder repaid the loan, it will be taxable as deemed dividend. So simple. I'll make you write this in the notebook. It will not take more than 5-10 minutes and I'll solve immediately the study material question also. So you got one thing, that section 222 and now clause A. Everything is given out of accumulated profit. A clause is any asset. Any asset which is distributed to shareholder. Any asset which is distributed to shareholder. है ना? Out of the accumulated profit, any asset you are distributing to shareholder. It's like deemed dividend. It is nothing but deemed dividend. Next. Second one. All the 5 clauses we will write. I want all of you also to write. Don't just sit and watch. Likho na. Simple. I'm saying, dictating, and in the same way you write. So any asset distributed to shareholder out of accumulated profits, it is deemed dividend. Second one is out of accumulated profits, any debentures issued. Any debentures are issued to shareholder or bonus shares to preference shareholders. It's deemed dividend. C. Out of accumulated profit, any asset transferred. Out of accumulated profit, any asset transferred. Yeah. On liquidation. On liquidation, any asset is transferred to shareholder out of accumulated profit. It's deemed dividend. Out of accumulated profit, any asset transferred on reduction of capital. You reduce your capital, internal reconstruction, you adjust your assets value, and in that you have used the reserves and given it to shareholder. So out of accumulated profits on internal reconstruction or reduction of capital, you have transferred asset to shareholder, it's deemed dividend. And last one is, it's a closely held company. It's a private company giving loan to shareholder. Private company is giving loan to shareholder or to an HUF firm where beneficiary is shareholder. Private company out of accumulated profit, not transferring the accumulated profit, just out of accumulated profit, private company is giving loan to the shareholder, or they are giving loan to a third party HUF firm where beneficiary is shareholder. Then this loan is equal to deemed dividend. Even if later repaid. Even if this loan is later repaid. Ma'am, accumulated profit में से private company gave the loan to shareholders but they have repaid. Still, it is deemed dividend. Only case it will not be deemed dividend is exception to section 222 clause E. Exception to section 222 clause E. Okay, it will not be treated as deemed dividend if giving loan is nature of business of private company. That private company's business is only to, financial business. Many companies, they give loans and all. And in routine, they have given loan to the shareholder, no problem. But otherwise, out of accumulated profits, if they give loan, it's going to be taxable as income from other sources deemed dividend. Okay? Right. Let us check. Are you able to write? Take your time, 2 minutes. Abhi, next when I solve the questions, I know out of 5-6 times, one time they've asked this. But if they ask, it's like super easy. Sure, I'll repeat. So that if you have missed, you can write. See, companies having capital and undistributed profit in the form of reserves. Now, out of reserves, if any asset is distributed to shareholder, deemed dividend. If any debentures are issued to shareholders or bonus is given to shareholders, deemed dividend. If any asset is transferred on liquidation to shareholders, deemed dividend. If any asset is transferred on reduction of the capital, deemed dividend. Or if it is a private company giving loan to the shareholders, or say private companies giving loan to an HUF or a firm or a third party where beneficiary shareholder, then this loan will be treated as deemed dividend even if it is repaid loan. I know thoda sa law ke jaisa hai, but abhi when I apply this and solve the question, it's going to be very easy. Check with me here. Yeah. Out of accumulated profit, if they give directly or to shareholders, or in case of liquidation, or on account of reduction or private company, and so on. है ना? Loan or advance to shareholder who holds beneficial ownership carrying not less than 10%. Loan or advance is given to any concern, HUF firm, AOP, in which shareholder is a member or partner. Shareholder is having the beneficial interest. Any payment on behalf of individual benefit of any shareholder made to any person. Even if shareholder repaid the loan with interest, still it will be taxable as deemed dividend. It will be taxable as deemed dividend. Now, any advance or loan to shareholder in which shareholder has substantial interest will not be deemed dividend if loan is given by normal course. It's their business to give the loan. Where loan has been treated as dividend and subsequently the company distributes dividend to shareholders, including the borrowing shareholder, and dividend so paid is set off, the adjusted amount will not become again taxable. Now, this is a story. If you understand, fine, otherwise, छोड़ दो. मैम ये क्या बोल रहे हैं आप? बिल्कुल सही बोल रहे हैं. बहुत easy. I gave loan to you, dear students, as a private company. Out of accumulated profit, I gave loan. Loan is taxable as deemed dividend. Now I said, listen, shareholder, don't repay the loan. Keep it as dividend. Anyhow, we are giving dividend to other shareholders. To you, we have given loan, no? We'll convert that loan only in the form. So again, with that dividend will be taxable and in your hands? No. Private company, when they give you loan, that time only it was taxable as deemed dividend. Again, when they convert the loan into dividend, it will not be taxable, right? Any payment made by company on purchase of own shares shall not be regarded as dividend. Such attracts buyback. This point buyback, just remove it from here. I've already given you a nice table in the capital gain. Please watch the third lecture of the capital gain for buyback, wherein earlier company used to pay the tax. Now buyback is taxable in the hands of the shareholders as dividend. Any distribution of shares pursuant to a demerger resulting company to shareholders of demerge shall not be treated as dividend. Yeah, obviously, if a private company is, say, private company or one company, ABC Limited, is splitting into AB1 company and C. So from here, when the companies are demerged, the shareholders will now get the shares of two companies. He was a shareholder of ABC Limited. Now he has got the shares of AB Limited and C Limited. Is this a deemed dividend? No. Whenever there's a declaration of dividend and distribution covered under 222A to E, shareholders, hence it will be taxable as income from other sources. This question is asked 2 times and it is so easy. Rahul, holding 28% of equity shares in a company, took a loan of 5 lakh from same company. On the date of granting the loan, the company had accumulated profit of 4 lakh. Yeah. Rahul is having substantial interest in the company. Company gave loan out of accumulated profits. So accumulated profits were 4 lakh. Company gave 5 lakh. The company is engaged in manufacturing activity. Is the amount of loan taken as deemed dividend in the hands of Rahul? If the company is a company in which public is substantially interested? Are you all with me what they are asking? Loan is given as deemed dividend in the hands of the Rahul. if the company is company in which public is substantially interested? Answer is no, because जो out of accumulated profit loan देना and it will be taxable as deemed dividend is only for private company. So any payment by company other than which public is substantially interested, it will be taxable. But 221E, however, will not apply where loan is given in a company in which public is substantially. Hence, this loan will not be taxable as deemed dividend. Answer is no. It's a company in which public is substantially interested and they have given loan. So no. What would be answer if lending company is a private company, a company in which public is not interested? Then if they have given loan to shareholder out of accumulated profit, it will be taxable as deemed dividend. But loan is 5 lakh. Out of accumulated profit, they have given 4 lakh. 1 lakh kahin aur se diya hoga. So what will be taxable in the hands of the shareholder? Closely held company giving loan to shareholder out of accumulated profit 4 lakh. देखो, first one तो not taxable. If loan is given by private company, it will be taxable to the extent of 4 lakh. समझ में आ रहा है? Private company out of accumulated profit giving loan to shareholder up to accumulated profit 4 lakh taxable as deemed dividend. Ma'am, but it's 5 lakh. 1 lakh additional, it will not come. Next. If Rahul repaid loan with 10% interest. Even if Rahul repaid the loan, it will still be taxable as deemed dividend. आपको बताया मैंने. If closely held company is engaged in finance activity, उनका काम ही है loan देना, then not taxable. Then not taxable. Public company giving loan out of accumulated profit, not taxable. Private company, taxable. If the loan is repaid, still taxable. Private company giving loan, but their business is only financial business, giving loan and all, not taxable. So one thing is clear just in the last 15 minutes discussion, that whatever amount goes to shareholders out of accumulated profit, whether company is there or company is closed, that's not sale consideration, that's dividend. Company goes into liquidation. Shareholder, take your 100 rupees. This is sale consideration for you. You sell your shares to third party, or because the company is closing, you sell your shares to me. Are you all getting? समझ में आ रहा है? So on liquidation, whether you sell your shares to others or you surrender back to company, you have to pay the capital gain on 100 rupees share. But if I give you accumulated profit on liquidation, it will be treated in the hands of shareholder as deemed dividend, taxable in income from other sources. But the practical problem is when the company is getting into liquidation, now we say shareholder, your capital is 100, your reserves are 300, against 400 hodgepodge, ye le lo. Out of that 400 which we are giving, how much is received for deemed dividend, other source? How much is received against shares, capital gain? For whom? For shareholder. And what about company? Company, the day one of the capital gain, and once again, if you don't remember, when the company goes into liquidation, asset which is transferred to shareholder on liquidation is not a transfer under section 46 for company. कंपनी के लिए कोई ट्रांसफर नहीं है. ठीक है? Now, next one we are doing. It's a very nice question and I would not solve it orally. I'll take it in writing, beta. Distribution of assets by company in liquidation. Do this topic after learning deemed dividend income from other source. That's why I printed here. If you can check, this is a part of your capital gain chapter. But when I complete solving the question in another 10 minutes, you will understand why I teach with other source. When the assets are transferred by distribution to shareholders by company on account of liquidation, such distribution will not be regarded as transfer. ये तो clear है. Taxability in the hands of shareholders. In case of shareholders of the company, capital gain shall be chargeable on distribution. On liquidation, amount received in cash minus deemed dividend or amount received in kind minus D. In short, on liquidation, the company can give you cash. Company has to give you 8 lakh, 2 lakh cash, 6 lakh property. In that 8 lakhs, how much I have given you against dividend? Nikal do, other source. Remaining sale consideration. It's very nicely explained in the diagram. I'll surely read this part after solving a question. Capital gain on distribution of the assets by liquidation. Yeah. In the hands of the company, it's exempt. In the hands of the shareholders, amount which is coming in the form of profits, it is deemed dividend, taxable under other source. Amount which is coming against shares, it is taxable as capital gain. So let us do this question. It's very interesting. Final में भी पूछते हैं, कभी इंटर में भी पूछते हैं. Same question is there in the material. Vasumati purchased 1000 equity shares of Rajesh on 22/70. Okay, for 120. The company was winded up on 31st July and balance sheet is given to you. 6000 equity shares are there. Out of that, Vasumati is having 1000. So 1/6 share. Reserves are there. Whenever company is doing buy and they are giving you reserves, it's out of accumulated profits deemed dividend. Provision for taxation. Here they have agricultural land and cash at bank. Now tax liability towards income tax was paid 3 lakh. You've already made a provision of 2,50,000 and now you are paying 3 lakh. So 50,000 more you have to adjust out of reserve. Ma'am, kaise? I'll make you write journal entry. I hope you're getting. Provision debit, reserves debit, because provision was only 250 but you have paid how much tax? 3 lakh. So cash bhi to kam ho jayega na. Whenever the company closes, they have to pay the government liability first. This you study in law also. So 3 lakh tax will be paid. The remaining assets were distributed to shareholders in the proportion of their holding, 1/6. Market value of 6 acres of the land on July 24. 6 acres of the land on July 24 is 10 lakhs per acre. तो ये जो एग्रीकल्चरल लैंड है इसका मार्केट वैल्यू कितना है? 60 lakhs. That's what we have transferred to shareholders. And that agricultural land received above was sold by Vasumati on 22/25. We are doing it for 24/25. So on maximum, so we have changed the dates, but if it is missed out, you can. Yes. Discuss the consequences in the hands of the company and Vasumati. Let us see. Transfer of the asset by company to Vasumati on liquidation is exempt. Company is saying to Vasumati, ki you take it. You take the agricultural land, you take the reserves and all. Against your share, we are closing. So when company is transferring 1/6 of the agricultural land and cash to Vasumati in the hands of company, any assets transferred on liquidation by the company to shareholder is exempt transfer under section 46. Now in the hands of Vasumati. Is reading the question clear? Whatever amount is given by company to Vasumati, stop. Out of that accumulated profit ke against the amount that take it as deemed dividend, remaining is routine sale consideration, it will be taxed. Very nice question for 5 to 7 months. Let us do it. एक एक करके sequence में अच्छे से लिखेंगे. I am in problem number 8 and actually it's about section 46 capital gain, but I have given it in income from other source. So write down the page number also. बहुत अच्छा question. It's really very nice. First write down taxability of company. Company is going into liquidation. So transfer of asset by shareholder. Transfer of assets by shareholder. Transfer of the assets by the shareholder. Sorry, by company. So sorry. transfer of assets by company to shareholder on liquidation is exempt under section 46 for company. Take your time and write it आराम से अच्छे से. Company is going into liquidation, so they are saying to shareholder, you take your agricultural land, no better, and you take your cash also. So the transfer of assets by company to shareholders on liquidation is exempt for company. Now we are doing the taxability of shareholders. Taxability of shareholders. First, I want all of you to write the journal entry. Ma'am, exam में लिखना है? नहीं, this is only for your learning. If you want, you mark something. But writing journal entry for tax paid will make it clear. इतना मजा आ रहा है. In income tax class, we are writing this. Provision for taxation. You've already done the provision for taxation, 250. 50,000 or you have to pay extra. General reserve debit to cash. First line, the tax liability 3 lakhs was paid. So 3 lakh cash reduced and provision reversed and general reserve में से 50,000 pay की. Now, cash available. Cash available is 6,50,000 minus 3,50,000. And general reserve कितना था बेटा आपके पास? 2,50,000. इसमें से 50 चला गया. Don't do total or anything. Just I'm saying how much cash is available for the shareholders now. 650 was there. 3 lakh you have paid tax, so 350. And general reserve, it was 40 lakhs. Sorry, वो तो 250 तो provision था. आज क्यों गड़बड़ हो रही है? 40 lakhs was the general reserve to distribute to shareholders, to give to shareholders. It will be 39,50,000. Now, let us start. Computation of income of Vasumati. See, Vasumati is saying whether I sell to third party or whether I give the shares to company for surrender. For me, it's a taxable capital gain. So, how much sale consideration received? How much company is paying to Vasumati? Agricultural land. How much is agricultural land, dear students? Dekho. 1 acre 10 lakhs, so 6 acres 60 lakhs. Iska 1/6. Ma'am, why 1/6? 1,000 share Vasumati is having other than 1,000 shares she is having out of 6,000. So agricultural land we will take 10 lakhs, which is coming to Vasumati. Now cash. Cash is 350. Just now on top. Ma'am, in opening balance sheet, it was 650. But 3 lakh you have paid tax in priority. So 350 ka 1/6. 58,333. 10 lakhs 58,333. 10 lakhs 58,333. Sale consideration received by Vasumati as a shareholder. Agricultural land ka 1/6 Cash ka 1/6, 1053. Total amount received. Now out of this received, amount received out of accumulated profit. This is the total amount. Company said against your capital, against your reserves, take 1/6. Bye-bye. So Vasumati is saying out of that, how much I have received against the reserves. So general reserve were 39,50,000. Ma'am, why not 40? Because part of the reserves have gone to pay tax. So 39,50. Uska 1/5. Ma'am, here 1/6, here 1/5. 160 करेंगे. 39,50,000 were reserves. Out of that, 1/6 belongs 658, 333. Four lakh. Anyone is having any doubt, then pause here. See, Vasumati got 1/6 of agricultural land market value, 1/6 of cash. But out of that total reserves ka jo 1/6 hai, this will be treated as deemed dividend under section 222 clause C. Company said these are your dividends out of accumulated profit. It will be taxable in other source. So now what is the sale consideration? 4 lakh minus the index cost of acquisition. First line of the question, the shares were acquired for 1,20,000 in February 17. So if it is February 17, don't take 17, 18. You will take 16, 17. The shares were acquired in 16 and 17. And they are sold in 24 and 25. Let us check for once index rates. So much efforts I've made in making this 300-page material out of that 1500 pages का जो हमारा institute का material है उसमें से. That too very systematic hierarchy में. What is important, adding my own examples also. Still somewhere rates, because they change every year, we'll check. 16 and 17 it is 264. $264 has become 363. So 120 is how much? 120 into 363 divided by 260. 1,65,000. What is the long-term capital gain? Now see, we have taken the indexation assuming that they are going for the first option, land or building, which is transferred after 23rd July with indexation. And without indexation also you can go. With indexation it will be 20% tax. Without indexation it will be 12.5%. So we are doing this option. Of course you can take it without indexation. Tax don't calculate unless they ask. Everyone is clear. Vasumati has sold the shares. Against that she got from company 1/6 of land, 1/6 of the cash. See cash, that's why I made instead of 653 lakh minus करके इतना. Out of that, whatever she got for accumulated profit, usko nikal do, to remaining sale consideration will come. 4 lakh. And what was the index cost? So this is long-term capital gain. Now immediately they said second agricultural land received was sold immediately for 15 lakhs. You received the agricultural land for 4 lakh sale consideration. 1/6 शेयर आपको मिला ना, ये रहा. Sorry, agricultural land जो मिला वो 10 lakhs. And within 2-3 months you have sold it also. So now after this you write down short-term capital gain. Ma'am, why short-term? Because agricultural land is sold for how much? 15 lakhs. And it was acquired in 10 lakhs. Abhi to mila. Vasumati just got it for 10 lakhs and she sold for 5 lakhs. So short-term capital gain is 5 lakh. Short-term capital gain is 5 lakh. Next, income from other sources. Dividend. You already got dividend from the company in the form of this 658,333. 658,333 deemed dividend under section 222 clause C. So what's the TI or the total income? $1,393, 333. 1,393, 333. 2,35,000 is long-term capital gain, 5 lakh is short-term, and 658,333 is this. Done. Nice. See, this is with the 2 decades of experience. I always say, if you would have studied this in the capital gain chapter, I'm to doing with capital gain because other source we did it. Huh? But if you study with the capital gain without knowing other source, it will be very difficult to understand why we are reducing 658. But the concept is so beautiful. Out of accumulated profit, whenever company distributes money or in cash and kind to shareholders, it's like a deemed dividend. So now here it's company is going into liquidation. Nothing is taxable in the hands of the company because company transferring assets to shareholder on liquidation is exempt. Now, company is giving 1/6 of the 60 lakhs market value of agricultural land and cash. So total amount received is given. Out of that, what is the amount received out of the accumulated profits? Huh? 658,333. So whatever amount is received against reserves, that will be treated as deemed dividend. And remaining sale consideration index cost capital gain. Acha, as a shareholder, Vasumati received land and immediately she sold it within 2-3 months. So it will be short-term capital gain. And whatever amount is received against dividend, it will be taxable as deemed dividend under section 222. Share it with your friends, those who say no, deemed dividend and liquidation is the only concept in capital gain we want to leave. It's easy. Company is saying take your money as shares, take your money as dividend. Shareholder is saying wait. Whatever money has come in the form of dividend, out of that against reserves jo aaya hai, go to other source. Whatever has come for shares, capital gain. Okay, that's all for these live classes for capital gain. Hope they are helpful. Somewhere I was going little more slow abhi jo last problem kiya, because so many adjustments were there. So one-on-one it should sing. Any doubts you have, comment below. Subscribe, share, because you will definitely get more live classes here for all the tax amendments, one-shot revision videos, right? All the best to all of you. Bye-bye. Thank you.